Hello, everyone. Welcome back. Welcome back to the chat room. This is your host, Ed Ponzi, your FX educator here on behalf of FX well, this is Ed Ponzi. There you go. On behalf of edponzi.com. I hope everyone's having a great day out there. It's a beautiful day here on the East Coast of the United States, and fantastic weather. Life is good. Everything is going according to plan. But not necessarily in the Forex markets, but I will tell you this. One thing I can tell you wholeheartedly, volatility has come back with a vengeance, and we saw some crazy things happening in the market. Now, first of all, I'm going to throw a ATR up here for you. Look at this, though. Look at the big hammer today on Euro. And, you know, we were getting very close to our second target. Our second target is 133.05. Of course, we already hit our first target, so we're playing with house money. We got as low as 133. Can't really read that. 133.32. So we came within 30 pips of our target, and then it reversed, and now we're like 80 pips from our target. And that's going to happen sometimes. But man, what a day! Still, I have no intention of changing anything, but nobody really knows what happened today. Let's take a look, though. I just want to do a quick volatility measurement with you, and the way we do that, we just throw ATR up there. And, you know, gosh, if you were trading the market, though, I mean, I'm sure you felt that volatility today. And, man, this thing still shows 41 pips a day. It's kind of hard to believe. Things are definitely picking up. Maybe even the yen pairs. Look at that. There you see a little bounce in volatility in the yen pairs. The yen was wild today. And the yen could be the big story going forward, not just for today, but for the foreseeable future. Why? Because the yen did this amazing thing today. Watch it on the 5-minute chart. I'll show you. Look at that. Woo! Just jumped off a cliff at a very odd time of day, 12:20 p.m. New York time, which means it's midnight in Tokyo and it's 5:30 in London. Just a very odd time for a very large order to hit the market, which has many people speculating, was this a fat finger that created this? This is on the 5-minute chart. You drop from 102.30 down to about 101.80, about 50 pips in 5 minutes, and it sprung back up. But it did not spring all the way back up, which I think is interesting. That leads me to believe maybe it was not a fat finger. Now, what is a fat finger? A fat finger is an order that is placed by accident. Maybe you've done that at some point. Maybe you wanted to buy 10 lots and you bought 100 lots, and you're like, oh my God, you know, and you know, that's going to happen sometimes. And this, a lot of people are thinking this could be a fat finger, but I'm thinking it's possible, but not necessarily. Was that a fat finger trade in dollar yen is the question that everyone is asking. And all of a sudden, during a quiet August trading afternoon, there was a flash of excitement in the currency market. Dollar yen plunged 0.5% within seconds. And the move was affected across other pairs as well. Now, if you understand how the currency market works, you know, everything's related. If dollar yen is plunging, then that's moving the dollar too. So if you look at Euro USD during that time, Euro USD is actually going to perk up. It's going to shoot higher as dollar yen shoots lower. That shouldn't come as a big surprise. Now, back to the dollar yen. That's the 5-minute chart. Let's take a look at the 1 minute. What does the 1 minute have to say about all this? Wow. So the whole move happens in 3 minutes. And it's one of those deals where you look up and you're like, huh? You know, you can't believe it's moving that fast. You're thinking, what the heck just was there another, you know, nuclear problem? It's the first thing I thought of. And, you know, you look across around the way. So 3 minutes, dollar yen is going to lose, you know, 50 pips in 3 minutes today. So the fat finger thing just means a mistake, a bad trade. But nobody really knows. There's no evidence of that. Someone was saying 27,000 yen contracts traded in a very short period, and that suggests a fat finger. In other words, maybe someone was trying to trade 2,700 contracts or 270 contracts, and they hit 27,000 instead. Maybe they hit an extra zero. But it's always the possibility that yen, it's not necessarily simply wants to go very long the yen. So don't assume that you know, because we don't know. We don't know right now, okay, exactly what happened. Usually when it's a fat finger, at some point someone comes forward and says, yeah, it was us. You know, we hit the wrong button. I haven't heard anything to that effect as of yet. Let's get to some of your questions. We love your questions here at edponzi.com, so keep them coming in to info@edponzi.com. Hello, Ed. I'm taking a page from your book. I know I must not go against the trend, but have you seen the JPY shorts? Man, talk about tipping the boat. Kobus is right. I mean, you know, it's wild out there today. I see consolidation in pound yen, but it looks like there are no more bulls in this trade. This plus the fact S&P's at critical highs tells me I got to wait for support to break and then short the pair. I talked to my pan master. My master is long the pair. Well, part of that is because I don't want to set a bad example by jumping in and out of trades, and that I felt when this trade was set that I felt that it was a good trade and that it was going in my favor. And I have a very wide stop on this, but I can't deny that this trend line is breaking and this is breaking down. I mean, there's no way that I would buy this now. I mean, it just looks awful. And you look at the same thing, and that's breaking down, and the pound is just breaking down across the board. The pound's breaking down against the dollar. The pound is just having a rough time. And I think something that happened that was very telling for the British pound. You see, I'm trying to set a good example by not jumping in and out of trades once I've set my course. Trying. But let me show you something. Like today, for example, you know, first of all, we have this news at 3 a.m. from Great Britain. Housing prices up 10% year over year, up 1.4% month over month. Those are the kind of numbers that scream housing bubble, especially when you were only looking for 0.4, right? So the pound, did it shoot up on this news? I mean, obviously, if we're in a housing bubble, it's much more likely that the UK is going to raise rates, correct? So what did the pound do at that particular moment? I'll take you right to that moment on the 5-minute chart. And by the way, this news is going to hit at 3 a.m. my time. So here's 3 a.m. on the 5-minute chart. What happens at 3 a.m. when the news comes out? This news should have made the pound stronger. What happened? Nothing. Completely ignored the good news. And wasn't it just the day before that we had a very strong PMI, construction PMI number out of the UK? Again, the market ignored it. So the market has been ignoring good news out of the UK. What about bad news? At 4:30, we got some industrial production numbers, weaker than expected year over year, weaker than expected month over month. Manufacturing production weaker than expected month over month and weaker than expected year over year. So how did we react to the bad news? Oh, suddenly the market's paying attention. So the market is ignoring good news on the pound and paying close attention to bad news on the pound. What does that mean? It means you probably don't want to own the pound. And yeah, I own the pound right now. And so if I dump it, I don't want to set a bad example by dumping out of it too soon for you guys, because obviously my stop is not been hit. Very hard to hold it under these circumstances. Yen against the dollar, and it's ignoring into bad news. This is telling me the party is definitely over in the pound. And here I am long. Pound yen. Oy. So if I sell it before it hits the stop, now you know why. I haven't done that yet. I'm still mulling it over. We're a long way from the stop. I gave this man, oh man, I don't. Great question there, Cobus. Thank you very much. Now you know the real story. And it's very hard for me, especially jumping in and out of things when the stop has not been hit, the target has not been hit. Great question. Here's another question. Can you please explain the COT report? At what stage you use it as a contrarian indicator? Let's take a look at the COT report. And down we go. Chicago Mercantile Exchange, short format. I'll give you an example. Like Euro's not there yet. Okay, Euro is not there yet. It's not a contrarian trade yet, but it's getting there. It's 3-to-1 short to long. I've seen it much worse than that in recent years. I've seen it go 5-to-1, 6-to-1. That's when it was crazy contrarian. We're not there yet. And that's a good thing because I am short the euro, right? So normally I would like to see this 5-to-1, 6-to-1 or worse. And growing, and that's the important part, and growing, the advantage growing. Okay? So this is not contrarian just yet. What about the yen? The yen is beginning to look contrarian. This is another reason why I'm really thinking of getting out of that pound yen trade. So if you see me get out of it beforehand, you know why. They are 10-to-1 short the Japanese yen. And what is happening to the yen? It's getting stronger. Right, was a strong yen move. They're lined up. This could be the contrarian indicator that tells you it's time to buy, not short the yen. This could be it. Okay? Especially, look at the way the shorts are just piling in, 15,000 new long contracts. Nobody's long. Now, if everyone's short and nobody's long and the yen starts getting stronger like it did today, what are they going to do? Okay, what are they going to do? If you're short, you gotta close it. And I'm short, and so's everyone else. Gosh darn it, it's time to get out of this trade. Look at that. Everyone's short. 80,000 short, 7,000 long. 10-to-1 short to long ratio. The shorts are getting carried away here. They're piling in. All those shorts are going to have to buy at some point. They're not going to stay short the rest of their lives. At least that's what I assume. Okay. So I would say we are at that stage. You see the difference? 10-to-1 versus 3-to-1. I think I've talked myself, during this session, I believe I've talked myself into closing the pound yen trade. Maybe we take it out before it hurts us. It can't really hurt us. I mean, the stop is very far away. That means the position is small, but still. That's the stage at which you should be using it as a contrarian indicator. It's probably time to buy the yen, ladies and gents. Maybe it's time to flip the script around here, huh? Okay? Okay. Let's get some more questions. How do you use the dollar index to trade the euro? Well, the dollar index consists of a basket of currencies, which mostly is the euro. And this for sure looked like it was breaking out a few days ago. You had a big green candle up here, and now we're right back to where we started. Maybe this thing is going to reverse now. I don't know. But it seems to me that the movement that occurred in Euro USD kind of coincided with the movement that occurred in dollar yen today. So if it was a fat finger, I expect the dollar to turn around and get stronger. Remember, that fat finger or alleged fat finger in dollar yen is showing two things. It's showing the yen getting stronger, and it's showing the dollar getting weaker. So the dollar didn't just get weaker against the yen. The dollar got weaker against the euro and formed that big hammer. Hammer time. There it is, right? Big old hammer. And, you know, Kiwi also looked like, yeah, nice hammer on Kiwi as well, huh? What do you think of that? Bold move out of support, right? It comes into this demand zone and just explodes out of it. God, I love that. Right? Just love it. Okay, so anyway, it can be used to trade dollar yen and pound dollar, but it's much better to use it to trade euro, because euro makes up 56% of the dollar index. I think the British pound and the yen only make up somewhere around 12–13% each. So, right, the movement in, you know, we saw the big reversal in the dollar today. Didn't really see a big reversal in the yen, though, in the pound, though. Did not see a big reversal in the pound. Okay, so it's much better for Euro USD. Using the dollar index is potentially much better for Euro USD than it is for dollar yen and pound dollar. Okay, but as far as the biggest portion of the index, that is clearly the euro. Any thoughts on dollar CAD? And remember, when I talk the US dollar index, I'm talking about this one, $DXY. There are other dollar indexes, and I'll give you an example. FXCM has its own dollar index, and in FXCM's dollar index, I don't know how it's weighted, but I'm pretty sure, I'm darn sure, that the yen and the pound get a much larger weighting. So let's make sure that we're talking about the same dollar index. I'm talking about the trade-weighted dollar index. And you just look it up, just Google it. US dollar index components. You should get 56.8 on the euro, or maybe it's 58.6. Then you know you're looking at the right one. Okay, if you see 25% euro, 25% yen, 25% pound, then that's the wrong one. Okay, great question. Serious damage on pound yen, do you think? It simply means yen is working as well as a safe haven currency? Yeah, I do think so. I think the yen strength is because people are scared legit about Russia massing troops on the border. People are legit scared about the stock market in the U.S. starting to teeter a little bit. I'll get to that in just a minute. I think there's plenty of reasons to be scared. And I think the yen getting stronger might have something to do with that, and that's also another reason why, yeah, I'm going to close out pound yen. Pound could also be overvalued as well. It could be the perfect pair to short right now, actually. When one country offers a high bond yield, what's the first thing that comes in your mind? First thing that comes in my mind is inflation emerging. So, for example, what countries offer very high yields right now? Turkey, Brazil. These are emerging markets. And it's not the same as trading the euro. You know, these are, if you're going to trade the Brazilian real or the Turkish lira, those are wild and crazy trading markets, and they're thin. But yeah, there's a lot of interest involved in being involved in a trade like that. There's potentially a lot of carry involved. Absolutely, yes. But man, it's hard to trade that stuff, and you got to find a broker that's going to offer it to you, first of all. Second of all, watch out for the spreads. The spreads will really hurt you on those type of emerging market currencies, depending on the broker. Okay, so if I see high yield bond, and again, if it has a high yield, I mean, who has the lowest yield right now? I mean, German yield is extremely low right now. Low yield means safety, so high yield means risk. Think about that as well. Is it possible to use the ADX to spot the trend and entry? There are specific ways to use ADX. I'm not going to go into it right here. But there are specific ways to use ADX like, for example, according to ADX, the dollar index is obviously trending right now. It's a strong trend, and but you have to also realize that it's at resistance. I mean, I thought it was through. I thought for sure it had broken through, but we're right back there at that level. So maybe it was not a breakout, maybe it was a fake out. But that ADX is telling you that the trend is very strong. I don't use it a lot because truth is, a lot of times ADX can alert you too late to the trend, and that I've seen that happen quite a few times. I'm not saying it's a bad thing, and when ADX is rising up, that means the trend is getting strong, not necessarily up or down, just strong. When ADX is falling, that means the trend is getting weaker. It doesn't have to be. It's not necessarily an uptrend or a downtrend. It's just that whatever trend is going on, and so I do think it can be useful, but you don't see me use it very often because, for me, my personal experiences with it have not been great, is how I would describe it. Your results may vary. Okay? All right, let's take a look at this market. Now, why is it possible that people are loading up on Japanese yen? Could be that they're scared because look at this stock market. Does that stock market look scary to you? It looks scary to me. I got rid of Wells Fargo today. Wells Fargo, man, I was lucky I was able to get rid of it. This looks awful to me. This looks like a head and shoulders. Everything looks like it's breaking down technically. Okay, everything looks like it's technically in trouble. Okay, not everything, but the market overall. And when the market overall goes down, what currency tends to become the strongest? The yen, which is why I'm thinking, maybe what we saw today, that so-called fat finger, maybe it was those yen shorts covering. Maybe a bunch of those yen shorts were covering. Maybe a bunch more have to cover still. Could be. Could be. All right, so if things get ugly, the yen should do very well. As far as stocks are concerned, well, we still have gold, which did very well today. I don't consider that a bullish or a bearish position. Look at the gap up we got from that today. Just a strong move. We're still down a little bit on this. It's funny. Gold seemed to be reacting to Putin earlier today, and it really didn't move much after it opened. But even though the dollar did make a big move, gold didn't. Gold just seemed to ignore it. So there's a weird disconnect in the markets today. The yen, the dollar, gold, it's just odd, but we're still in there. I'll tell you what, though, I am thinking of getting out of this trade too. You know why? Because it's not doing what I expected it to do. I expected gold to start rallying at the beginning of the third quarter because that's what happened, I believe, 3 out of the last 4 years. Like beginning on day 1 of the third quarter, gold just took off. We are now over a month into the third quarter. Gold has done nothing, and there's a good chance I'm gonna let that go as well. So we're gonna clear the decks, man. We're not gonna hold on to bad stuff. By the way, are we not glad that we cleared the decks on CVI? We dumped that sucker. It's done nothing but go down ever since. We bought half up here and half at 65. We got out at 63. So our average cost was 67.50. We dumped it at 63.50. Now it's at 58. It was a great story, but it doesn't matter. It just wants to go down. Who am I to argue? I don't care if Warren Buffett owns it. Stock's going down. So aren't you glad we got out of that sucker? But quick. We got out of Starbucks. Starbucks is, it hasn't really moved that much since we got out of it. There's a bunch of other stuff we sold too. Some of it's going up, some of it's going down, but the market's starting to look pretty scary. Now, I do have Apple still. Apple is, apparently they're going to release the new iPhone in about 1 month. Everyone is saying it's going to be around September 8th, September 9th, something like that. So I'm hanging on to this. This is one of the strongest stocks out there, so this is the one I'm least thinking about selling. DF, Dean Foods, had a decent day today, but has not been exactly done well for us. It's done very poorly for us. JC Penney, we are still up on this trade. It's had a rough couple of days, though. We bought this at 860. It went up almost to 10. Now it's down below 9 again. And we're still long that one. And you can see like the longs are starting to not work out as well. And ACT, this one is down. This one had a rough day today because Walgreens decided not to do an inversion, a tax inversion. So, but you can see like that's it. We don't have a lot of longs. JC Penney and Dean Foods are not volatile stocks. They shouldn't move too much. Apple, we have a half a position. That's a volatile stock, but we have a half a position. ACT, this is the only one where we have a full position, and it's volatile. And so we're not overly long. And we have our shorts. Now, Lulu had a good day today, but overall, we are making money on Lulu, and we are doing very well with TJ Maxx on our shorts. So both of them were pretty volatile today. And both of them actually had decent days today, but we're doing well overall on these. Okay, so that's it. It's a very small portfolio. We dumped Wells Fargo. We're probably going to sell something else soon, and we're probably going to short something else to sort of balance it out. What am I looking at for shorts? We talked about Kimberly-Clark. You see that nice little rally? It's like, come on up, Kimberly-Clark. Come on up. You know, I'm very much thinking of shorting something in the consumer staples sector. That's where this one lives. We'll take a look at volume average here. Now the stock, when the stock was getting hammered, the volume was really high, but today's volume, not so much, right? Today's volume was very low on the rally according to this. I hope it's correct. But according to this, it rallies on light volume. It came down on heavy volume. I love to see that. Come on up, Kimberly-Clark. I'm going to short your brains out. And CL also had a good day today, but had a good day on very good volume. So that warns me away. This is probably going to fill the gap here. Maybe they'll have another good day or so. Clorox, very good day, slightly above average volume. Kimberly-Clark to me looks like the one. May I show you something about Kimberly-Clark that I find very interesting? We haven't talked that much about fundamentals on stocks, but check this, just humor me with this one. Check this out. KMB key statistics. Right? Now this is a consumer staples stock. And look at the valuation. It is trading at 19 times earnings. They make diapers, people. It's trading at 19 times earnings, and the PEG ratio of 1 is fairly valued. 2 is high. PEG ratio here is 2.5. I'm going to short the diapers off of this thing. Okay, it's ripe for a fall technically and fundamentally. It's ripe for a fall technically and fundamentally. So I will probably be pulling the trigger on that one pretty soon. Okay. All right, that's okay. KMB, Kimberly-Clark. I want it to come up a little bit more. That would be nice. Okay, let's think. And by the way, right, these stocks that I'm showing you, they all went very quickly from year-to-date highs to falling beneath their 200-day moving averages. Very quickly. Very quickly. No way, no getting around that. Okay. All right, so I would love it to come up to the 200-day moving average. That'd be, man, I would love the short Kimberly right there. Okay, gang, that is going to do it for us. Thank you so much for listening, for your time and attention. We'll be back with you in just a few days with another session, so enjoy this one. The main thing to watch out for, my folks on the currency side, watch out for the European Central Bank, Draghi, Thursday morning. Big event Thursday morning, Mario Draghi. Watch out for that one, okay? I am hoping that Mr. Draghi scares the pants off of everyone and pushes the euro back down and pushes the euro down to target 2, which is 133.05. We shall see. If he doesn't come out and threaten quantitative easing or TLTROs, then we could see this thing rise possibly. Okay, folks, that's all for now. I'm out of here. Thank you so much for listening. I'll speak to you again very, very soon. Take care.